Welcome back. 2:31 Eastern Time. That means oil has officially closed up for the day, and this is going to be one for the record books. Look at what's on your screen right there. That's the price of WTI crude. It is at minus $35, down 292%. Let's go to Brian Sullivan with more. Brian, now that the close has happened, what next?
Well, I don't know, Kelly. And I've been talking to people today just got off the phone with the guy I trust. Something broken here. And, you know, I normally don't like to come on TV and say, I don't know, but I don't know. I mean, the reality is $0, I can understand that. Negative, even $1 or $2, you can understand that to a point. Negative, going from 0 to negative 35 is idiotic. It's the sign that there is something broken. I don't know if it's the futures market that's broken, if there's a hedge fund or many that have just imploded, or if it's some kind of levered ETF problem. This is actually not possible because think about it, the cost of every contract, Kelly, is 1,000 barrels of oil. So you're talking about negative $35,000 to take delivery. You can find someone to take it for that. That's why I say it doesn't make sense anymore, not when oil is trading positive $20 for June. So the math doesn't work out. It was curious to watch at first. I think, and I'm going to go on a limb here, and if, you know, I think right now we're getting into market structure issues, which we've been talking about for a year. I never imagined this. I think I got to make more calls, but the guy I just talked to in Houston is like, something's broken in the market because that doesn't make sense. There's a lot of these levered ETFs, negative 2 and 3 times, things like that. So
sure,
I got to.
It looks like a flash crash, Brian. I mean, you look at the chart, it looks like the flash crash, except if you had paused it at the bottom. One question that people are asking. That's
kind of what I mean, yeah. Good point.
Absolutely. The question that's coming up is, so wait a minute, if I bought a contract, 1,000 barrels, you're telling me I could make $35,000 or something like that? I mean, why not have the government buy up all the oil and, stick it in reserve or someplace? I know this brings up the storage issues that are why we're seeing this play out today.
Well, there is room in the SPR, right? And the president, they did approve private companies being able to put their oil in there, or at least they were talking about approving it. You can load it at about 4 million barrels a day. You extract it 4.4, you can load it at about 4. I think there's 80 million barrels of space, something like that. My brain is tired, but point is you could fill that up pretty quickly, Kelly. It's not going to solve the longer term problem. The point I'm trying to make is, and I don't know what it is, that's a broken market right there. That is not, and I'm sure there's smarter people than I am that come on and maybe go on and say that Sullivan's a ding dong and he doesn't know what he's talking about. But that is a broken market. Years ago, I was a commodities trader in an illiquid market before I got into TV, and this is a liquid market, literally, but that's not normal. That's not right. There's some issue. Somebody blew up. I don't know. I gotta do more work on this because I hate to come on your show and say I don't know what's going on, but hey, no BS here.
Just the BS, who covers the oil space so well. Brian, thanks. We appreciate it, sir. We'll check back in with you soon. Tyler?
All right, Kelly, historic day in the oil market, as we were just talking about, with that May contract going negative, and not just by a penny or two, but by $30-some. Jim Yorio is managing director of TJIM Institutional Services. Jim, explain it to us. Brian said this is a broken market. I don't know how it's broken, but that just shouldn't happen. What's going on here?
Well, okay, I think he's probably right. I think there's probably something that we're going to find out is broken, whether it be a hedge fund or a levered ETF. That's fine. But we have to remember there's another possibility, and that's that, remember, the economy is absolutely broken and has been shut down, and the demand for oil is nothing. I mean, I've had the same tank of gas in my car for 2 months. So the point is that if you were fill up on oil and you didn't want any more, there didn't seem to be a price that someone was willing to take it. That's probably an oversimplification, and that's just taking it at face value. But it got to be. Again, I'm a trader. I didn't even know much about the delivery procedures until today. All day long, everyone's been like, "Wow, looking up the delivery procedures." So it's deliverable the 1st of May through the 30th of May, and people it seemed to me that nobody wanted to step in for 2 reasons. One, they don't want the oil, but 2, you don't want to try to catch a falling knife either. There are some interesting takeaways to me. Look at the stock market. The stock market's only down, not even 2%. To me, when something this weird happens, regardless of the reason for it happening, risk assets don't like bizarro world, and they usually trade off precipitously. We didn't really today, and where there wasn't really a reflexive bid in the 10-year as well. So it's almost like everyone stood back and were like, wow, this is somebody else's problem that we got tankers of oil and no place to put them. It's absolutely fascinating. I never thought we'd see anything like this.
I think that's the best explanation I've heard about this all day. This is just simply bizarro world, and because you just can't imagine it. But so explain this to me: is somebody making money from this big sell-off, or are people with short? I mean, how could you get that short?
Well, if you were that short too, wouldn't you? At what point in time would you be covering all your shorts? What is it you want? We're down $30. No one even imagined that. And the May market got extremely illiquid, towards the latter half of the day. So to answer your question, I'm not sure who's making money in it. I know for certain a couple things, and one, that I want to be as far away from it as I possibly can be, because it was like, hide in a bunker. Something very, very weird was happening. But again, we have to remember that we essentially stopped everything a month ago. And there's something like that does not happen without some severe ramifications. And this is one of the first really odd offshoot we're seeing.
All right, I'm going to bring back Brian Sullivan. Jim, Bizarro World Iorio has opined there. Brian, any further thoughts?
Well, yeah, and I'm still trying to get to the bottom of it, but I think so, and maybe Jim was still there. By the way, Jim was on WEX this morning, Worldwide Exchange with me as well, Jim. This is a historic day. Here's why I was saying it's broken, or to layer on to Jim's Bizarro World comments, okay? You're never going to pay somebody that much to take the oil. That's the bottom line. You're not going to do it. And I'm not going to, I don't want to say anything untoward, but you're getting to a point where if you have to pay somebody that much, whether you own mini contracts, right? There's zero economic, and you don't have the money, and you can't. Think of it this way. Okay, normally I buy your oil, Tyler. Now I'm trying to pay you to take my oil. You're going to get to a point where someone's just going to say, you know what? I'm not going to deliver your oil. Sue me. Like, it's not economic. I'd rather be sued or, whatever, dispose of my oil in some unenvironmental fashion than pay that much money and bankrupt myself to give you my oil. That's the reason I'm saying it's broken, because the cost of that market would never make sense. Nobody would ever pay $35,000 to deliver various contracts of oil when there's nowhere to put it. You're just not going to do it. And so that's why I think we need to get to the bottom of how these contracts traded like that.
Can I shoot something in real quick?
Thank you very much, Jim. Sure, of course. Close it off,
I've known
Jim.
hundreds of oil traders throughout the years, and they've been long contracts a lot of times and don't have any facilities to take delivery on contract. So part of the panic could be a bunch of holders of oil going, oh, crap, I don't know what I'm supposed to do. My yard's not big enough for 2,000 barrels of oil. So I mean that part of the panic element too is people who are getting out who literally cannot take delivery. They're not set up for that.
Well, it's all going to be delivered to the Sullivan estate later this afternoon. Gentlemen, thanks very much. Won't work. Jim, Brian, thanks. And for more on oil and energy, let's get over
go right in my hair,
Seema
Tyler,
Modi.
since I haven't shampooed in weeks.
Let's go to Seema now for Trading Nation. Thanks, guys.
Hey, Tyler,
Seema.
let's continue the discussion around the historic moves that we're seeing in the oil market with your Trading Nation team today, Ari Wald of Oppenheimer and Boris Schlossberg of BK Asset Management. And Ari, from a technical perspective, how significant is this move that we're seeing?
Well, wow. May contracts for crude amazingly trading in negative territory given the lack of physical location to store oil. But let's assume the commodity is now dislocated from the energy stocks. It's not that much better for the sector, which is coming off its lowest level versus the S&P 500 since 1931. That's a 90-year relative low. So we point out that some tanking stocks are up in the news. We think there could be a trade there. We like that area, but the rest of the group has been and remains do not touch it. It's toxic. Don't touch it.
And Boris, the fact that energy stocks like Chevron, a major oil producer, is down around 4%, what does that tell you?
That tells me that the market is taking this with a lot more grain of salt than the futures market. I think we need to just calm down. It's not like there was billions of barrels trading at negative 35. I think it is a market dislocation. It could have been just a final tick that pushed perhaps some margin calls into highly, highly negative territory. Overall, of course, it's a horrible situation. Of course, oil is trading at 3% of S&P versus 17% of the S&P when oil is trading at 140. But if you're a value investor, this is actually the exact scenario you want. Now, nothing is going to be improving in the near term. It's probably going to get worse before it gets better. But at this point, I'm actually going to be very surprised if perhaps Mr. Buffett isn't going to start making some moves in the major oils. Because at this point, if you're a believer of 3, 5, 6 years down the road that India, China, all the other emerging market nations are going to industrialize more and more, demand ultimately is going to come back up, and it's going to pay off big. So I do think ultimately this is going to be it's a fascinating day. We're going to be talking about this 3 or 5 years ago as an ultimate buying opportunity.
Got it. Boris and Ari, thank you for providing your perspective. Head to our website for more Trading Nation or follow us on Twitter. Kelly and Tyler, back to you.
All right, Seema, thank you. Seema Modi. Still ahead, a historic day for the oil market with that plunge into negative territory. We closed at minus $37 a barrel. We're going to have a lot more on what this means for both oil, for the energy companies, and for the whole economy when Power Ledge continues.